Hello everyone and welcome back to the Innovation Markets Forex course lesson number 4. This is part 2 to part 1 of price action, which is the 4th lesson on our Forex course. And just to have a quick recap, we've had lesson number 1, top-down analysis, lesson number 2, trend lines and understanding how to find them and use them. Lesson number 3 was market structure, very important, and just as important, and one of our favorites is price action. So lesson number 1, or part 1 of price action, we highlighted and showed you the 5 key candlesticks that you need to know, and quite frankly it's the ones you only ever really need to know. We will go into other candlesticks in more detail and look at some more today, but the 5 candlesticks we showed you are the most important and the ones that we as traders use every single day. We don't really need the smaller ones in between. So we're going to look at that in a little bit more detail today, and we're going to have a little look over what we left the last lesson, part 1, what we left off on in that lesson. So we gave you a sort of an activity or some homework, as you can call it, to use those beautiful morning and evening star formations that we showed you, or the tweezer top and tweezer bottom formations that we showed you, and to go back in time, go back and look at some old price action, going back to old price action in the chart, and or even not even the old price action in the time between the last video and this video, to just highlight, not necessarily trade, but highlight the morning and evening star formations at key levels of support and resistance, and the evening and morning star formations, and also the tweezer tops, and to see how many entries or how many trades you could take purely just using that. And we've had such great feedback, just like the course lesson number 3. We had loads of feedback about course lesson number 4, because some of you have said, I simply can't believe how simple it's become. Using what we showed you at the end of the last part 1 on price action, and combining that with lesson number 1, 2 and 3. So we'll have a little look at that today, but we're not going to go into that too much. But as I said, we did give you that homework, so we're going to look over that. Just have another brief ourselves quickly with the 5 main candlesticks again, and just again show you on some real life examples at how they work, and then we're going to go into a little bit more on how to use them. So what we want to do today is delve in a little bit deeper. We kind of skimmed over the topic of different time frames, and I know many of you who are new to trading won't really understand how important different time frames are. So we're going to talk a little bit about that today. I'm going to talk a little bit more about price action and what we see in front of us in the chart. So we spoke about candlesticks, we spoke about the different, here we can see evening star formation. Let me just drop down. I'll drop down to the 4 hour in a minute. We'll see some more time frames. You can see here a morning star formation, 1, 2, 3. So we talked about price action and the candlesticks, but what we didn't really talk about was the wicks, and the wicks are one of my favorite part. Now what is the wick? The wicks are these big white wicks here, as we explained in the first part 1. This is a candle, and each wick is shown here in white on my chart, and it represents something very important. Not just the candlestick itself, the body of the candlestick, the wick is very important, and is a telltale sign for traders to know when to get into a trade. And like I always say, just as important as knowing when to get into the trade, it's also very important to know when to get out of a trade. So we're going to be going into studying and looking into the wicks today. Then we're going to be looking at how we use the higher time frame and the lower time frame, using the price action on all of those time frames, and start building your confidence into taking a trade. So again, we've had great feedback on the last lessons on how well the morning and evening stars and the tweezer tops work, and we've had great feedback on that, but now and how many trades have worked out for you guys. But what we now want to do is start building that confidence, and with that confidence we want to start building confluences. So confluence, what is confluences? So what a trader's term, what many of you will see, that's just popped up. Let me just quickly go back and clear this off for a second. So quickly before I carry on, guys, here is my main chart, as you always know. But as you just see popped up, it's just something I want to show you, is something I just wanted to highlight and never forget at this stage. So here you can see my beautiful clean chart. This is how I love to see a chart. But remember, I just wanted to do a quick recap from where we started to now, to make you always remember to understand that every stage of the course lesson is very, very important. So here, as I said, I love a clean chart, but I always have my lesson number one, course lesson number one. I always have my top-down analysis. I always have my support, my monthly and weekly levels of support and resistance on my charts, or on one of my charts. So at a glance, I can have a quick look, and it tells me, it can help me decide whether I'm going to take a trade, or where I can decide whether not to get into a trade. It's very, very important. So even though this is nice and clear, just as I was just about to pop up, is remember, we always need to have what we showed you in course lesson number one. So just on that note, this is GBP USD, the same pair that I'll be using for every single lesson. I don't want to go and looking at different charts to try and find something to fit a description of what I'm trying to teach you, because that's not real. I want to show you what I'm teaching you on the same chart, and show that I don't need to go, or we don't need to go looking at different charts, when we can just keep to one chart, follow the price action, and see how it works out, and see how it plays out time and time again. So I think the last lesson was a month or so ago. It was quite long, so we let that resonate with you guys, and so we gave you that sort of bit of a homework, so I gave you some time to see how that works. But what you can see here is GBP USD from the very beginning, course lesson number one. We were down here somewhere with price action, and we showed you how to get your top down analysis, so your monthly level of support, level of weekly level, monthly level again, weekly level, monthly level, and we've shown you how that works, and you've seen how price breaks resistance, support, and so on, and how well these levels work. But it might have been okay, it worked at that time because we were consistently moving in an uptrend on every single video that we've done, I think, on price on course lesson one and course lesson two. But now what we're seeing is a change on this pair. We're actually starting to see a downtrend, as you can see here. So this is good for us, because now it shows, now we can use examples, and as I said, not go off on other charts. We can use real life examples on this chart to show you how everything we've taught you so far works, and what we're trying to teach you now with price action, how that also works. Now, understanding how important it is to, even though price action is beautiful, how it's very important to always have these monthly key levels on your chart. So at a glance, like for instance now of course there would be key levels above here that we could see that price reacted very, very well to, but I've cleared these off because normally I'll only have the support and resistance levels closest to price at the time still on my chart. Apart from that, then I normally clear my chart off, so normally all of these would be gone, because I don't need them on my chart clogging up my eyesight or clogging up price action, and I just want to have the closest level of resistance and support on my chart at that time. But of course, as you saw in price action part one, I always have another chart open, or I have other charts here that I can use for different time frames. I use this for weekly and daily on my left here, then I drop down over to this right hand tile, I have my 4 hour, and that's where I can have my beautiful clear price action. And what I actually often do, guys, as you can see here on this left tile here, now just quickly I'll jump into this, guys, if you want me to, if you leave a comment, if you want us to break down how to use TradingView a little bit more, this software that we're using, leave us a comment. That's something we can add as part of our course. But here I like to have different charts for different things, and you're going to understand why. Here on the top left I have my top down analysis, my monthly chart, my weekly chart, and my daily. So at any time I know where the most important levels on the monthly, weekly and daily are over here on the left hand side. Then over here on the right hand side, I like to have price action nice and clear, but this is where I start to have course lesson number two. So you just saw that monthly key levels, that was course lesson number one. Then what I like to do is have a nice clear chart where I can clearly have my trend lines on. So like what we can see here, I've got my trend lines on here. So I don't have to keep redrawing them, I don't have to keep changing them. So for instance here, we've got an outer, we've got an inner trend line, as we know from our Forex course lesson. So this is what I will likely have at any time on a trading day. I'll also have different trend lines on, maybe from a higher time frame if I need to, like a bullish trend line if there is one. But at the moment, because we're in a downtrend, we're looking at price action pushing down. So then what I have then on lower time frames is stuff that will show you as we go now further into the course. Here I'll start to have my 1 hour chart. Why would I have a 1 hour chart? Because 1 hour chart is where we start looking for entries. So note that down, guys. As I said before, course lesson number 1, 2 and 3 is understanding the direction of the market, understanding the monthly, weekly and daily key levels, understanding the market structure. But then, as I explained on price action, one of the first things is the weekly, daily and 4 hour tell you the direction of the market. Then what you want to do is drop down to the 1 hour time frame, as you can see here up on my left. Then we want to start looking on the 1 hour to be able to take a trade and to be able to get an entry into the market. And that's what today's lesson is about. And that's why I'm actually quite excited to get a little bit further into this lesson. So now today we need to understand, like what I was just saying a minute ago, I'm going to break down, is build your confidence to start taking a trade. Build confluences to start taking a trade. So confluences is a trader's term. You may have heard this before. Confluences. So confluences, what is confluences? So basically confluences or confidence, whatever way you want to say it, or whatever way you want to think of it. Confluence is basically building up reasons to take a trade. And we want to build up as many reasons to take a trade as possible, to put the probability factor more in our court to taking a trade. So if you think when you want to take a trade, you want to have the highest probability trades possible. If you go into a casino and you put your money on red or black, that's a 50-50. That's a 50-50 chance. Now we don't want to take a 50-50 chance. We want to take a 70-30 chance. So 70% in our favor against 30% chance that the market might win. Or of course 80%, 90%. Nothing's 100%, but we can build it up. Now the way to get from 50-50 by just simply pressing buy or sell on the market is to start adding confluences. And the more confluences you have, then the more probability you're going to have. Having 1 or 2 confluences is like 50-50, 60-40, but then when you start getting to 3, 4 and 5 confluences, you start building up to 60, 70, 80% potential or probability in your corner. And the way to build confluences is by one of the major ones is price action. So this is why we're now introducing confluences today, and this is where you're going to now start getting confidence to take trades. So remember, confluences, however you want to explain or however you want to think of it. So confluences, the more confidence you have, the better the trade, or the better the probability. So now confluences, what are confluences? That's what we're going to talk about today. And as I just said, obviously, as it's price action is one major part of confluences, because price action tells us what the market is doing. So if we can see what the market is doing, then, or we can understand what the market is doing and we can read that, it gives us a confidence to take a trade. Also, confluence is using what we have shown you so far in course lesson 1, course lesson 2, course lesson 3 and part 1 of course lesson 4. So the way we're teaching this and the way we're delivering each and every part is very, very important, so that you can really study each lesson. And I do go over this on each lesson and keep saying it, but I say things more than once because it's so important, and that's the best way to learn. It's really important to keep going over those first course lessons, keep watching them, keep letting them sink into your mind, because they are the foundations of what you need to be a trader, and they are the confluences that you also need. So if you can think, it doesn't have to go in this order, but if you can think, right, I'm taking a trade and I'm going to say you want to take a buy trade because it is at a monthly support, that's a great confluence. That's one confluence. Then 2, a second confluence could be like, you could be thinking, okay, well, price is at a monthly support, but it's also hit a trend line from course lesson number 2. So there's 2 confluences. So now this trade is getting very, very good. It's starting to really look strong because you're thinking, okay, well, price is at a monthly support, course lesson 1. Great, and the only way you're finding monthly support is by doing a top-down analysis. Be too lazy to only do price action, and then you can get yourself into trouble not knowing if price is close to a level of support or resistance. Trend lines, having your trend lines on, not being lazy, making sure you strip back your charts, keep putting them on. The long term, the outer and the inner, the 3 trend lines from course lesson number 2, having those on. If you see price hitting a trend line, then that is a confluence. But for instance, the example of this trade, if you have you're building confluences for one trade here, so if price is at a monthly support and it also comes into contact with a trend line, and then for instance we can say it hasn't broken market structure, that's another great confluence. Then 4, we can say, right, well, I've seen a morning star formation on the daily, and this is where we're going to cross over today and explain this, how it's now very important to understand price action, the candlesticks that we've shown you, the 5 major key candlesticks, but also how you need to understand dropping down from daily, 4 hour, 1 hour, we're on the 1 hour time frame now, to build confluences to take the trade. So using price action, but not just on one time frame, but using price action across various time frames to build confluences to then have the confidence for taking a trade. And you're going to see this when I start doing some examples in a minute. So for instance, you might have a morning star formation on the daily, then you drop down to the 4 hour time frame, 4 hour, and you might see a tweezer bottom. So now you're thinking, I've got 5 reasons to buy this pair. I know if I saw this pair now, I'd be buying. So that's how you build a confidence for a trade. I'd be looking at this trade thinking, I have such a high probability of taking this trade. So not only have I hit monthly support, I've also hit the 3rd touch of the trend line. Ideally, as you guys know, 3 is a magic number, which is going to be a course lesson on itself. Why 3 is the magic number in trading, but you know 3 is the magic number on trend lines. Then market structure, I'm thinking, okay, well, price has might have broken a trend line, hasn't broken market structure. I know that I can buy this pair. Then I've seen a morning star on a daily formation, so I know that the higher the time frame, the stronger the candlesticks and the stronger the formation. So if I see a daily morning star formation, I'm thinking this pair has such a higher probability. This is the sort of 80% probability trade. Then we go down to a 4 hour tweezer bottom, and I'm thinking, okay, this is another sign. This is another sign that price is going to go up. So then what I want to do is drop down to the 1 hour time frame like we're on at the moment and see, is there any other signs? But more importantly, start looking to enter. This is where we want to start looking to enter from 1 hour down to the 15-minute time frame ideally. So 1 hour, 30 minute, 15 minute. So here you want to start looking to enter. So 1 hour to 15 minute. On the 1 hour, I might see a bullish engulfing. That's another confluence. Then we might even be able to build more confluences. I might drop down to the 30-minute time frame, which would be, so as I just showed you, 1 hour to 15 minute. These here, 1 hour, 30 minute, 15 minute. These are the time frames where I want to look to enter. So I drop down to the 30 minute, and then I might see another morning star formation. And even though the lower the time frame, the weaker the candlestick, if I'm seeing all of these higher time frame, confluences, now I'm just looking for more reasons. It's like the icing on the cake. I've already know that I'm going to enter by the time I get to about the 5th or 6th confluence, because this is crazy confluences to have in one trade. And then not by my 7th confluence, I'm just looking at a place to enter. So I might see a morning star, and then I can say, okay, Now I can enter here and I can put my stop loss here. Risk management is going to be coming in very closely in one of the next few videos. So Confluences, very, very important part of obviously the most important part of taking a trade. You need to have Confluences. You can't just look at the market and say, oh, I think it's going up today, I'm going to buy, or I think it's going down, I'm going to sell. You might as well go to a casino. But looking at price action, we can start building these Confluences, and Confluences mainly come from price action. So this is where it's going to be really important to look at this today. So today we're going to start looking into this in more detail, and we're going to study a few more candlesticks, but we're going to start looking at something else we haven't covered in the first part. So we looked at price action. Is there anything you guys think that I might have missed on the first one, in part one? Well, a very, very, very important part of price action is the Wicks. The Wicks that we see here. So that is a very, very important part, and a very, very important part of getting in and out of trades. So now we're going to delve in deeper to that and start looking into that into more detail. So let's look into why Wicks are important. I'm going to just stick on this chart for the minute on the 1 hour. I'm just going to illustrate it quickly, a little bit like I did on the last video, just really quickly, because I want to draw this out. It'll probably give you a bit better of an understanding of why they're quite important. So here, if you can imagine this being a candlestick, let me quickly make this green. And then let's make another candlestick here. Whatever color this may be, most of you will be used to using green and red candles. We use the same color. Very, very important for us why we do that, which we'll be explaining in further along the videos. Now we've got green and red. So if you see two candlesticks, this is why wicks are very, very important, guys. Because the wicks, it's not just about the body of the candle. The wick really makes the candle. And the wicks are so important. And you have to be very mindful of the wicks and how they work in order to enter. So many of you who've already been trading or been trading for quite some time, you'll know that we like to enter on the wicks, which means that you're getting in at the top of a candle or the bottom of a candle, and you're getting the best entry. But it's also, by doing that, being able to do that is by understanding prior wicks or prior candles, and just understanding how the market moves. So on each candle, for instance, if I had a wick like this, not like that, not so bent, let me straighten it up. If you see a wick like that on a candle, then this candle looks quite bullish. But whether it's green or red, if I have a wick like this on the candle, it changes what this candle looks like completely. This now is a bearish candle. Even though it's green, we've just seen the price push all the way back down. This is what a shooting star looks like on what I've shown you on part one. And then what we'd be looking for is a bearish engulfing candle to engulf this candle here, and then we see price roll over to the downside. But see how the wick completely changes everything all of a sudden. Same with the bearish candle. Same with the bearish candle. Let's just put this over here. Same, if I can get it straight. Same with the bearish candle. I'll just leave it there for the moment. Same with the bearish candle. You can see at how it looks now. Even though this looks like a bearish, this is a bearish engulfing on this prior candle here. If you have a big wick, it tells a complete different story. And this is a major part of the price action, because this is telling us that price has been up here on this candlestick. That at one point price was all the way up here, but price has now pushed all the way back down. So it's telling us that the pressure of this, the selling pressure is really, really strong, and I would want to be taking a sell trade straight away following one of these candlesticks if it was in the right place. Don't know when it's gone up there, but I'd be looking at taking a short trade straight away, because this is a good sell signal. So the wicks are very, very important, and we're just going to look at the wicks in a little bit more detail now, just so that we can understand them. So if I just if I'm going to go back to my higher time frames, I'm going to go to the 4-hour chart here. I use this as a 4-hour chart and keep it nice and clean. We can see here, if I just zoom out, I'm not going to spend too long on wicks, but I'm just going to give a good brief explanation. If I just zoom out here, especially if I just zoom out a little bit more, you can see the candlesticks that I use, or the wicks. We can see the white wicks. You can see here how when we see a cluster of wicks, like there's quite a few wicks here, you come down, you can see these long wicks like I've just drawn out. See the long wicks here, like a tweezer bottom. See this cluster of wicks here. You can see that's usually where we see that price is going to start reversing. That's why we love the tweezer bottoms and the tweezer tops that we showed you in the first episode. See here, tweezer tops and sort of tweezer bottoms here, especially on a morning or evening star formation. So for instance here, the bigger the wick, the more rejection that we're seeing in the market. But it's something I'm going to show you today that is going to be very, very important to your trading. So the wick is very, very important and part of how we get into a trade. So for instance, using the example that I showed you at the end of part 1, you can where we look for morning and evening star formations. Let's have a look here. Here we've got a morning star formation. Here we've got a morning star formation. This is something that we showed you on the last lesson. So again, straight away we can see how well it worked. Let me just highlight this in a different color so it's not so strong. Here's a morning star formation. Not too many wicks at the bottom, but we've got 1, 2, 3 wicks here. Then we pushed up, nothing too much, but you can see here, a wick here, a wick here. But see how this candlestick here, see that, like I just drew out a minute ago, see that big wick here. Now see how that tells a complete different story on this candle compared to other candles, because it shows us that there's so much more rejection on this candle. That price has tried to push up higher and break above the previous highs, but it's pushed all the way back down. So when we see big rejection like this, it means that it can give us another confluence or more confidence in the candlestick we're looking at to take a short. So if I see this candle, I'm going to want to take a short because I've just seen this big massive wick. So basically what we're getting at here, and we're going to show you, is when we see big wicks in the market, it is almost like an alarm going off or showing, or we see a cluster of wicks, that this could be a turning point in the market. So we can see here we've had this big wick up here, and this big wick shows us that we can look to take a trade in the opposite direction. Now remember, price action part 1, this is why we highlighted the tweezer bottoms and the tweezer tops. Where can you see a tweezer bottom here? Here. So look, if I just highlight the actual wicks themselves, and not even the bodies, because the bodies I don't care about too much, but see here, see the 2 big wicks. These wicks are showing us there's huge buying pressure coming into the market to push this pair back up. So you can see here, these 2 wicks here only pushed up a little bit, but it still did push up. Still could have made some money there in the market. Here then what have we seen here? Why we would have known to get out of this trade. 1, 2, 3, morning star formation. Guys, please go back to watch part 1 if you haven't seen part 1. You have to see part 1 to understand this. And you can see here, guys, on the 4-hour chart, we're not getting very far, and we're already seeing how we have been given multiple entries into the market just by using what we're showing you from the end of part 1, and what we're highlighting, and hopefully now just helping that light bulb go off in your head even more, is showing you the wicks and how important wicks are. So see here, we spoke about pin bars, or tweezer bottoms I should call it, here, but see, it's because of the wicks. See how much buying pressure has come in and pushed price back up. These wicks are so important. So like our example or the homework that we gave you, just to go back and look and even do it again, just go back and wait and just have patience, because you're at a beginner level of trading, but this is, to be honest, more advanced than a lot of people and know how to trade and trade correctly. If you just wait for these type of price actions to show up, especially on the 4-hour, because it's the direction. It's showing you the direction, so it's telling you it's rejecting this direction. So here we've got tweezer bottoms, big wicks. That's what we're showing you here. Here's small wicks, but we did have the evening star formation. Then we came down, small, not really any big wicks, but small wicks, but we did have the morning star formation, so that showed to buy. Then we came up, quite a big wick here. See, pay attention to the wick itself. I'm just going to try and do something, guys. This is a bit... So I'm just going to take this off, guys, because it's a bit harsh here and it's not helping me show. But here, see the big wick here? this was a telltale sign. Okay, we're seeing rejection, especially when we got this rejection over here where we had that evening star formation. So we got some rejection here. Then when we saw this big, even bigger wick, now it's telling us to sell. Then we come down, price is pushing down, price is pushing down. We're not seeing any morning stars. We're not seeing any rejections yet. We come down here, we see what we're talking about today. Wicks. Look out for these wicks, guys. The wicks tell us what's going on in the market. See a wick here, price pushing back up, bullish engulfing, then price starts to push back up. Morning star formation here as well. So now if you just think, don't only just look for morning and evening star formations and tweezer bottom, but also look for those tweezer bottoms and tweezer tops, because they're so powerful, because tweezer bottoms and tweezer tops are obviously are very much wick orientated, and the bigger the wick, then the more powerful they are. So here we've had a buy signal, sell signal, buy signal, sell signal, buy signal, buy signal, and this is all from the part 1 of price action. Then we come up here. What do we see here, guys? See, we're not making this stuff up. Evening star formation, 1, 2, 3. Then it comes back down. Not really much is happening. We've had a wick, we've had a wick, we push through, we're starting to push back up. Then what have we got here? As price comes back up to a prior area of resistance, lower, so lower low, lower high, lower low, lower high. No, didn't make a lower low. We came back up towards the lower high over here. What have we got? These beautiful wicks. These wicks are what we want to see. Traders, I don't know about other traders, but I get excited when I see wicks, because it's like, okay, there's a trade available. There's a trade coming. What? Look out, be on the lookout. Something is happening here. It's showing us that there's price pushed up to this level, rejected. See that big push all the way back down? This is the 4-hour time frame. So these are big wicks. This is a lot of price action. For price action to push all the way back down on the 4-hour like this, it means that price was very, very bearish. Then if a price pushes back up on the next 4-hour candlestick and does it again, this is almost shouting at you to say, take a sell trade. And here you can see is not as strong, but here 1, 2, 3 is a morning star formation. Then we'll go back down. What we've got here is we've got some wicks, nothing too clear here to be honest, but a little bit of a wick. Then we come back up. Now we've got here, this is a nice evening star formation. Why is this a nice evening? Well, they're all nice that I've shown you, but why is this a nice one? We've got 1, 2, 3, but see how there's a bit more wick to these. There's a bit more wick on these ones than what some of the others here. So it shows it's quite strong. And then we see here, wick, wick. This is a shooting star as well, this candle by itself. At the opposite of a pin bar, nice wick on it. And then bearish engulfing, price push down. Now price is pushing back up to here. This will be interesting on this candle to see what this does. It's coming back to a lower high here, back up into this region. So we'll see what this does over the next when you watch this video, you can see what happens on this and see if this does actually wick or if this now starts to push up higher. But what we could, if we're looking at what we're seeing here, we could potentially, what we'd be looking at is to see if price does wick all the way back down. And if the next candlestick does it again, then or we start seeing even a star formation or something like we've seen prior, then it might give us an indication to take a short trade and take a short trade on this. But here, can you see just the wicks, guys? The wicks are very, very important. Now let me just drop down to the 1-hour time frame on this. The 1 hour. Actually, I'll show you this in a minute when we go over through the different time zones. But here, I just want to drop down to these levels because it's something we're going to be showing in a minute. Is how we build the confluences, like I showed you. But actually, I'll come back to that in a minute, guys. So here, do you just understand how important the wicks are? So I don't want to go into it too much, but it's just very important not only to be looking at candlesticks, but to look at the wicks. They're sort of one of the main parts of price action. What I look for. Now, something I want to show you and what is very, very key is when you're looking at taking a trade or looking for these wicks, there, as we've explained before, there's in the price action part 1, there's only 5 candlesticks you really need to know. And one I'm just going to highlight now as we're talking about wicks is the pin bar and the shooting star. So we know a pin bar is like this. And a shooting star looks like this. So pin bar has a big wick at the bottom because price has tried to push down. So this candle, let me just, so this candle at one point would have been looked like this, full body, but then it closed back like this. That's a pin bar, and this is telling us that price is potentially going to push back up. This is what we've seen here, what we've seen here, and we haven't seen it anywhere else here at the moment that I can see. And then what we've got is a shooting star, which normally we want to see at the top of a trend, and that's the reason that I'm making it red for now, because we want to see it for when we want to look at taking a short trade. So same as like what we've seen here, this is a bit of a shooting star candlestick here. That's a shooting star, that's a shooting star. These are one of my favorites. These are the favorite things for me to look out for. But I get excited when I see a pin bar or a shooting star candle. Remember, I only gave you 5 candlesticks that you need to look at, and you can see here by us just going over it again, they're the only 5 you need to really look at. I think the last video, part 1, where price was back around this region, I think we were still in an uptrend if I remember correctly. Now we've gone into a downtrend, and you can see by using just the five key candlesticks from part 1, you can see here how price has worked. So even though you could have gone off and back tested like we asked you to do your homework and go and look back, even if you only use it on the most recent price action from the last video to now, you can see how well it's worked. So I'm just going to break down these 2 candlesticks because, as I said, these are 2 of my favorite, and I get excited when I see these. And then what is even better than seeing one of these guys is, of course, seeing 2. And then if you see 2 of these, and hopefully by now you know what we are looking at, as I've mentioned it quite a few times today. And I've mentioned it, well, I drew these out and showed you in the last. You probably already know, but I just want to draw them out because it just helps to understand what exactly we're dealing with. Computer's lagging slightly, guys, so apologies on that. So what's better than one of them is obviously 2. Now if you can get 3, even better. 3 the magic number. But here we can see badly drawn, but what's better than 1? 2. And what is 2? So we don't just have a shooting star anymore. We don't call it a double shooting star, we call it a tweezer top. And here a pin bar, so price is pushed down, so it's a pin bar, not 1, we've got 2. What do we call it? We call it a tweezer bottom. So just as I keep saying, there's only really 5 main candlesticks you need to know, and those formations. I now just want to go into a little bit more detail on these candlesticks so you know how to use them and when to use them at the right time. So here, I'll just quickly show you these. You can see here, tweezer bottom, tweezer bottom, tweezer top here, tweezer top, tweezer tops here. They all come in all different shapes and sizes, but as we get into the later part of this video, we're going to see that a little bit more often. And as I explained, these come in all different shapes and sizes, mainly down to the wick, the size of the wick, because we can see here that these can be different sizes, these pin bars, but see the size changes because of the size of the wick. The wick is a telltale sign. It even is like a tail, but a telltale sign to tell us that the market is going to potentially move in the other direction. We just want to show you how to use them and how well they work, just combining everything that we've shown you so far. So here you can see that how these candlesticks have changed in size purely because of the wick. So the wick is a very, very important part. We just zoom into these tweezer bottoms here. We can see if we saw a tweezer bottom here and the wick was only half the size of these, it wouldn't give me as much confidence or as much confluence to take the buy trade. It still would look good, but it doesn't give me as much confidence as wicks the size of these are. So these are very, very big wicks, especially on the 4-hour time frame. So these big, huge wicks show us that there's been even more of a bullish push. So the bigger the wick, the more rejection. So this price had to push all the way down, but the bigger the wick, it means price pushed all the way back up. So it now means that there's more chance of that momentum carrying on and pushing back up. So price pushed all the way down here, price pushed all the way back up, and there's a strong probability that price is going to continue moving with that momentum. Like if we see here, price pushed all the way back up and it's pushed all the way back down. So the bigger the wick is, that's the alert for you. That's to say, guys, look, something's happening here. There's been a lot of movement in the market, and here this is pushed all the way back down. So then it's about the momentum. Then you want to get into the market when there's momentum, especially if you're getting into a trending market and want to make money fast. And then so now you've seen price push down, and now this tells you that there's momentum in the market. And now you can get into the market because market's pushed all the way back down, and it's going to continue pushing down because you're now seeing the momentum in the market. And a side note, again, is something we're going to get back to in the future, but as it comes to my head, I'll say it so you can write it down. A lot of people get caught out in the market because they don't have patience, or they don't wait for the momentum, or they don't wait for these wicks. So for instance, here you can see on the 4-hour time frame, price has been moving sideways for quite some time here. Price is moving sideways, price is moving sideways. It's just sort of doji candles. It's not really, like you can see here, going down and up and down and up. It's just moved sideways here. But price, there's no momentum here. Price is ranging. This is what we call a ranging market. So price is ranging here. So then a lot of people, by the time it gets around this area, they think, I'm so impatient, let me just jump into a trade. I think I see something, let me jump into a trade. And then they jump into a trade, and then they get a big wick like this goes against them. So they might be thinking about taking a short trade here. A big wick goes against them like this. They get taken out, and then price has that momentum. It's built up that momentum. It's taking liquidity. Again, a future lesson. It's taking liquidity, and it's now got the momentum to actually make this drive and make this push to the downside. So this is why we're teaching you these as well, guys. As I said, this is how we trade. I only really use these candlesticks. I don't care about the rest. Some people might try and overcomplicate it, but you can see here you don't need to know about the rest. And it's because the tweezer tops and tweezer bottoms, which are just drawn out, are so important because they show you when there's momentum in the market. Do you see how now we're starting to build, how hopefully you're starting to think, oh, now I'm understanding a little bit more. Not only have I just showed you tweezer tops, I just broke it down a little bit more to make you understand that, oh yes, of course, when there's wicks in the market, it means there's momentum. So it means that something's happening. So think of these as an alert, like an alarm. When you see some wicks, it means, listen, something's happening, pay attention, there's movement in the market now. Because at other times, it can be very, very quiet. But also one of the reasons we're showing you this is because what's trading about, guys? It's about getting into the market and making money. Now, where do you get into the market? What's the, before you've even started to learn trading, I'm sure you've all heard the famous saying, buy low, sell high. Of course, everyone knows that. If you got this far to watch a Forex course lesson, you probably know that as well. So what are we doing here? What have we shown you? What's in front of us, guys? What have we just highlighted? And purely using what we showed you in part 1 of price action, you're buying low. When there's momentum in the market, you're selling high. You're buying low. You're selling high. You're buying low. You're selling high. Selling high. And here you could even bought low. There's that bullish engulfing. The only other candlestick formation that we showed you. I'm not going to draw them all out again because they were all there in the first lesson, and I hope that you guys have been able to watch that. And again, lots of you have said another game changer. So like I explained in part 1, I don't really care for price in between here or here or here. I want to be buying at the top. I want to be selling at the top. I was testing you there, guys. I want to be selling at the top, and I want to be buying at the bottom. I don't really care too much for price in between, and I don't really care about what price action does. If you watch price action 1, you'll know that here I don't really care too much for price action because I'm thinking about market structure. It's made a low, I know it's got to make a high. I'm watching for levels of resistance, I'm watching for levels of support, and then I'll start watching price action and combining the price action and support and resistance and trend lines to get an entry. Like here, for instance. Whoa, don't know where that came from. Very severe. For instance here, I know there's a level of resistance. Look, pin bar, one of these, here, resistance, support, pin bar, support. What does that mean? Buy. Momentum's in the market, price rejected the level of support hard, pushed up, now means buy. Bullish engulfing. What's this here? What's these three here? When you use it off a level of support resistance. Morning star formation, price pushes up, here it comes back down. See here, resistance, support, resistance, support. I don't want to be taking trades really in between. I'm happy to take a trade, especially at this stage when this is a sort of swing trade, intraday style, intraday where you can let it turn into swing trade. But here, if I'm buying here, I'm waiting for price to go up to resistance, like we taught you in course lesson number 1. Then if I sell here, I'm waiting for price to come back down to support. If I see spikes to the downside, for instance, this is how, like I mentioned at the start of this, candlesticks and price action and wicks are so important to understand when to get into the market. So if you think this is an alarm saying, hey, look at me, something's happening in the market, there's momentum, the market's been quiet and basically moving sideways, now we're seeing some big moves. So now you can say you can want to take a short trade and get into the market. So for instance, if you take a short trade here, then great, I'm now in a short trade, I'm looking for price to start pushing down. However, I also need to know when to get out of the market. But like I explained in part 1, I'm interested in price action at key levels of support resistance, which can be monthly, weekly, daily, or it can be a trend line, support or resistance, or market structure. So I'm only looking for those 3 key areas to look at getting in and out of trades. So then when price comes down here, if I notice that price is coming down to level of support, I also want Confluences to get out of a trade. Now this is, again, this might go over some people's heads, but everybody looks for Confluences, like I showed you at the start, of why to get into a trade, but they don't look for Confluences to get out of a trade. Sometimes people see one candle in the opposite direction, they get spooked. This was in part 1, and they say, okay, I'm getting out. And they can't hold the trade anymore. But you want to start looking for Confluences for why you would want to get out of the trade. Because remember, there also has to be Confluences on the opposite side of that someone's going to be looking to buy this trade. And maybe even you can look to buy that trade. Doesn't mean you only need to sell this trade. If you're looking at getting out of a trade, then why is that? If you're looking to get out of a trade, you now want to be looking at why you're going to then take the opposing trade. Because if there's enough reasons for you to get out of a trade, there should be reasons for you to start looking at getting in the trade in the opposite direction. Now, for here, you can see how price action tells you that. Because here, price is pushed down, you've got a pin bar here, doji. So it's showing you that price, this momentum that price created here, when it had this big wick to the upside, created this wick and then started pulling price down, pushing price down with that momentum it's just created. It pushes price down, but then it gets to this level of support, and then all of a sudden, see this big bearish candle here? Then it gets to the point where doji candle. Now that momentum's gone. So now you're thinking, okay, well the momentum's gone, so I want to be gone. I don't want to be stuck in this trade. I don't want to be stuck out or this trade reverse and go in the opposite direction. Then you can start thinking, well, I'm going to get out of this trade, take my profit, take my 2% that trade was, and then start thinking, I'm now going to look for reasons why I might buy this trade. Now you're seeing doji candles, looking at price action, looking at Confluences. So this is giving you the first sign of getting out of the trade. And then as you're watching this, you're seeing a 1, 2, 3, a morning star formation. Bang. Now you can take another trade. Now you're taking a long trade and you're going back up, but then you're holding the trade. You have confidence in your trade, but then it gets to a point up here. So you know you're coming back up to level of resistance, take some profit off. Then when you see an evening star formation here, then you go, okay, I'm going to take my 3% here and I'm going to short. Because I've just seen an evening star formation and then price pushes back down. So you want to look for confluences to get in and out of trades. And how do you do that? By looking at price action and by combining price action with course lesson 1, 2, 3 and 4, which is price action. So that is showing you what price action is. It's all about momentum, guys, and getting into trades and getting out of trades. So we want to teach you how to get into trades at the top and at the bottom, not getting stuck, not getting stopped out and not losing trades. We always want to be always at the top and always at the bottom. So as I said, now I think you can start seeing how every single lesson is starting to combine and is all becoming one. And now it becomes one even more so, because now we have to go back to what I spoke about earlier, is we have to start thinking about confluences for trades. And this is what we want to do with this part 2 of price action, and start looking at confluences for trades. Let me actually just copy this over to my other chart. We now need to start looking at confluences for trades. And this is the exciting part, because if you're brand new to trading, you may not have started taking trades yet. You might just be watching these and getting used to it, doing your back testing and seeing how well it works. If you have been trading, then you're probably looking at this and potentially thinking, this is so much easier than what I've seen before, because it's been kept so simple. We haven't got millions of things on our charts, we haven't got indicators, we haven't got to any sort of those, we haven't got anything like that, and you can see how effective. But now where do we change being successful in the market from lucky to being into our favor? This part here, confluences. And I use the word luck, because if you want luck, you want to get lucky in trading, or you want to get lucky by making money lucky, then as I said, you might as well go to a casino, because that is luck. Here is a business. Trading is a business. It's not here for people who just want to make money quick. It's not like that. Here is where you want to make money. You want to make decisions based on confluences. You want to add as many confluences, add up as many confluences as possible. If you can get 10, then great. But it's all about making cool, calm, collective decisions and trying to stack up the odds in your favor. So you can take a trade, and when you press that buy or sell button, you do not care if it loses, because you will have done your work, you have got the confluences, and you will be saying to yourself, I know that this trade should win, but the only reason it may lose is because obviously the market can always do whatever. The market is never 100%. But I now know that I've got 5 or 6 confluences. I'm happy with this trade. If it loses, it loses. That's just part of trading the market. That's just part of being in the Forex market. So now we're going to start looking at confluences and start building confluences on trade. So here I've just used a basic example of support and resistance. But let's actually just start looking into this a little bit more. So for instance, I'm just going to use any part of this chart. As I said, GBP USD has been in an uptrend for a long time. And what we can see here, just to start off with, prices pushing up. What have we seen here? So we're on the 4-hour chart. If we look at Wicks, guys, so this is perfect, because I'm mixing everything together here now. And I get quite excited when I teach, because I hope that the alarm bells or the light bulbs are going off in your head and you're seeing things, and as I'm saying them, and now you can start seeing them, that you can start getting excited about it too. So for instance, today we've spoken about Wicks. We didn't go into it too much, but we showed you the importance of Wicks. And what does a wick do? What does a big wick do? What did I say it's like? It's like an alarm. It's saying, listen, pay attention, something's happening. It's our way of understanding the language of the market and understanding that something is going to happen. So look at price action here. Big wick upside. They haven't had really too many big wicks anywhere here. You can see I'm just following price. We've had a bit of a wick here. The biggest wick recently here was here, pin bar. What happened? Price pushed up. Then here, a bit of a pin bar here, price pulled back, pushed back up. Then this one I highlighted here with a morning star formation, the biggest wick that we've seen for on this 4-hour chart for a while. See a bit of a wick there, a little bit of a wick there, a bit of a wick, but nothing too much. We see tops and bottoms. Then look at this wick. Look at the size of this wick at the top here. So what is this telling us? It's the alarm going off saying there's momentum in the market. There's a shift potentially happening. And why is there a shift? Because the momentum's coming to the market. So liquidity, something we're going to talk about in future lessons. But you can see here, there's a wick. This momentum has come into the market, just like here. Just like here, with the tweezer tops. Just like here. Just like here. So here, what you can want to do every day when you're analyzing, another video we'll do, there's lots to come, is telling you how to go about your trading day and how to start analyzing. So at the end of the day, 10 o'clock UK time, if you're in the UK, the market, the daily candle closes. You want to look through your charts and see what the daily candle is showing you. For instance, if there was a daily candle like this, it would be telling me that something's going to happen. And now I want to look for short trades, or on the 4-hour chart even. So here, as we're going to go through this and look for how to build confluences and how to start getting yourselves into trades, I'm going to just show you that. I actually need to go to the daily to start off with first. So if I just stretch this out, guys. So I want to keep to the same chart. It may get a little bit messy, but it needs to in order for me to be able to break this all down. So remember, we're looking at confluences. I'm going to start building your confidence to actually start taking trades. So you can start taking trades after this video. So here, just like I said, the biggest wick that we've seen on this daily chart for quite some time. Even without the monthly support or monthly resistance, the biggest wick that we've seen for quite some time on here. See, look at the daily chart, daily chart, daily chart. Here's a big wick, and see the move that happened after it. Big wick, big move up. Big wick, big move up. Big wick, big move up. This is how simple you can keep it, guys. Some of you who have been trading might think it's not that easy, but if you actually just strip it all back, it can be, because you can just see how it works here. Here, then, biggest wick that we've seen in quite some time on this chart, in however many days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. So the biggest wick we've seen in 2 weeks was this. Now, what is this telling us? This massive wick, as I just said, at the end of the trading day, you want, or wherever you are, when your daily candle closes, you want to look at the market and see what the daily candle is showing you. Here we've seen a massive wick on the daily candle. So this then tells us that there's a potential shift, or there's momentum in the market, and we might see a move in the other direction. So on a higher time frame, daily, we've got potentially one confluence. So this was an example. So let's just see. I'm going to do another one. Let's see what we can build up just by looking at this chart. Remember, this chart is being used purely just because we use GBP USD all of the time. So here we can see, if we're going to start building on our confluences, let's start thinking, all right, how we trade. If I go, what I would actually do, guys, is go to the weekly. There's a huge wick there, but we'll just start off on the daily for this example. And if you guys want me to do more top-down analysis and a real how I would analyze a chart and get into a trade from top to bottom, drop a comment and we can do more of those. We can do more of those as well. So let's have a look here. Here, by looking at this chart, and this is one of the main things that I explained at the start of this video, is we need to start showing you how to build confluences and your confidence to take a trade by using price action on different time frames, and understanding how powerful it is. So we've got what you need to know. You understand the candlesticks, you understand course lesson 1, 2, 3, but now we need to put it all together to build confluences to start taking trades. So here I can see that there is a daily, let's make this a little bit smaller, it doesn't need to be so big. We can see a daily shooting star stroke doji candle, and it could say big wick. Now, if I had been looking at this the next day, then what else would I be looking at right now? Of course, this 1, 2, 3. So let's even just put that in as well. If we've been looking at the next day, daily doji candle. Daily evening star formation. So even if you're not getting in at the top yet, right at the top on the wick, we don't need to get there yet. Remember, there's more course lessons coming to show you how to refine. So you're getting in at the tops and you're getting in at the bottoms. But here, you're still going to be making money. So because here, it looks like it's a lot further down because it's the daily chart. But this is going to show you how to refine slightly. So we're actually going to show you right now how you get the better entries. So here, we've got an evening star formation. So you can see here how the market's starting to move down. But here on this one daily candle, we could see here that this was a doji candle and a big wick here. Then what we want to do is drop down to the 4-hour time frame. Where is my text? Sorry guys. So now we're down to the 4-hour time frame. So we've noticed this big wick. So this is now telling us that there's a potential something else happening in the market. So we might not want to enter yet. We want to see some more signs on the 4-hour. So if we're quite conservative trader, I said there will be, later on, I might be able to show you some entries up around these areas. But if you're a more conservative trader, you might want to just look for a little bit more. So for instance here, I'm just going to use this price action. As I said, this is GBP USD. I'm using it out of the blue and just using what's in front of us rather than going to try and find price action from somewhere else that makes it look better. Let's use the real price action on the chart that we've been using this whole time. So here we got 0.1, we got 0.2, and since we've had 0.2, we can see that price is quite far away, pushing up here. Then what we've seen here is we've seen price come back down and we've had a break through the trend line here. We've broken through the trend line, and but we haven't done what yet? We haven't broken the trend because we haven't broken this mark here. We did in fact do that eventually when we broke here. But while we're trading up here, it still means that we could potentially be in a bull trend. So we're looking at taking trades against the main trend at the moment. So up here, when we've seen this wick, so this is giving us that sign saying, hey, look, something's going to happen. There's been the biggest wick that we've seen here on the 4-hour time frame for quite some time. There's been a big wick here. So now we want to look for what confidence we can see here. The next candle, not too good. The next candle, what have we got here? We've got another sort of shooting star candle. So if I just get rid of the daily formation, we've seen that on the bigger time frame. But let's just look on from the daily. We had that doji. Now we've got a 4-hour doji candle starting to show, and then that's followed by what? A 4-hour bearish engulfing. A bearish engulfing candle, the other candlestick we showed you in part 1. This is pushed down. Then so that's now shown us, okay, this is on a daily time frame. There's one confluence. There's one confluence on a daily time frame. Then on the 4-hour time frame, we've seen a bearish engulfing. We've seen price push back up. And then what have we got here? 1, 2, 3. We got an evening star formation. So this is why we look to execute on the lower time frames. So here is still the direction, but you can see here we got 1, 2. We've had this doji candle. So again, another big wick. Price has tried to push back up, like this candle did. Price pushed down. Then we had this big bearish engulfing. So see these wicks. See what I mean, guys? This means the momentum's coming into the market. so it can change in the other direction and change. See these wicks here? So see how they're followed by a big strong candle pushed down because we've had these wicks. So price has now got the momentum to make that drive in the opposite direction. So we've had this drive down, but of course it's met by some support. It's had another push up. Then what do we see here, guys? So this was to highlight this wick. Then what we see here is an evening star formation. Now, evening star formation. So now we've got 3 confluences to potentially give us a short trade at the moment on this. This is one example. I said we can do more of these in the future, but I'm using the price action in front of us. So before even looking to come back down and get a trend line break, which most textbook traders are taught, and you've missed most of the move, this is why we won't be showing you. If you're very conservative and you want to take a few pips down here, but we like getting in at tops and we like getting in at the bottoms. We don't like getting in after the main part of the move happens, because this is where most of the move happens. And if you understand price action, then you'll learn the telltale signs and you'll be able to catch these moves before the big moves happen, where the big boys are moving price and we can get in and jump in on price as well. So here we can see 1, 2, 3. That's the evening star formation. So from there, minimum what you really want is three confluences to take a trade. So here, depending on your risk appetite, you could say, okay, there's enough for me. I've got a big wick up to the upside, push down. It's a bit sloppy here, but a bit of an even star formation, how it's whipped back down, but not really. But we've got a second wick here. So what is the second wick, guys? It's a bit sloppy here, but it's a double rejection. It's almost like a shooting star. Double rejection of that area. Then prices come back up here. So we can quite clearly see that price is forming a resistance here. Sorry guys, I'm trying to make this as clear as possible for you. So prices push down, prices come back up, found some resistance here. We've got 1, 2, 3, an evening star formation. So you can look at taking a short trade here. Doesn't matter where your stop is. If your risk appetite is good and you don't mind getting stopped out and maybe potentially re-entering the trade once again, so that you can get a better risk to reward, you can keep your stop loss. But this is something we're going to show you in future lessons. You can keep your stop loss tight here above this resistance, or you may want to keep it above, which is what most people will do, especially once we've had this big wick up, we've had that liquidation, we've had this big move up. Once you see a big wick like that, if price is going to continue and break this high, we don't want to be in the market. So your stop loss wants to be at least just above where, or in line or just above where that wick is, where we had the initial alert and the initial sort of signal to show us that something was changing in the market. Then you can look to take a short trade, and then boom, what's happened? Bang, 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 and we're starting to move down. We're starting to move down like this. You can see how we're starting to get go into profit. But these are 3 confluences. But of course, this is just the direction. Remember, daily, 4 hour. So this is now going to show you how price action. I don't actually know what's next, but I know that I'm probably going to see something because of the price action on the 4 hour. But this is going to show you how to build confluences and add to these confluences and get it up to 4, 5, or 6, and get it more into your probability, or more into your favor. Now I'm going to show you the main confluences we want to see, but this is showing you confluences on price action. So remember that price action is the icing on the cake. The main confluences I'm going to show you in a minute, but these are the added ones on top. So the main confluences are the example I showed you at the start: monthly key levels of support and resistance, reacting of a trend line support and resistance, and market structure. And then on top of that, if we can start using the daily, 4 hour, 1 hour, and price action on top, then we've got loads of confluences, and we can press that buy or sell button and be quite confident with our trade that we're going to make money in the market. Now 4 hour, as I said, we've got daily and 4 hour. So the daily showed us this big wick, gave us that sign or the alert that something might be changing in the market. Then we dropped down to the 4 hour, saw this big wick and a second rejection, showing us that there's a rejection of this area. So again, an alert that we might be changing direction, because on a daily and 4 hour time frame is always about direction. And then here we've seen an evening star formation on the 4 hour, again showing us that there's a potential change in direction. So let's drop down to the 1 hour time frame. Sorry guys, this is lagging slightly while I'm recording. Now what we want to do here is start looking for reasons to enter as well. Let's just have a look here. Is there anything I see? Remember, trend lines are on daily, weekly, daily, 4 hour. So even here, we've added another confluence here as well. So on the daily 4 hour, we always have our trend lines. Obviously, we have our inner trend lines on the 1 hour time frame shown in lesson number 2. So you can see here, even here on the time frame of a 1 hour time frame, see here, when you go down to the 1 hour time frame and use price action, you can make so much money in the market. 0.1, 0.2. This is only in a small section of this massive chart that we've had on GBP/USD. You can see here 0.1, 0.2, look at 0.3 here. Golden third touch with the trend line. We've had 0.1, 0.2, 0.3. What have we got here? Morning star formation, 1, 2, 3. Bit of a wick here. Price pushed up, and then you could have made profit running up to here. But of course, when price makes a big wick like this, you're going to think, okay, well, let me think about getting out of this market now. So here we can see that price one had this wick, as we already know, daily shooting star, 4 hour doji, doji or bearish engulfing. We had this 4 hour wick, and we pushed down. Price has tried to come back up here. We saw that wick and that push back down. We adjust this trend line. We adjust this trend line, 0.1, 0.2, and now we've broken through 0.3. However, just because we've broken through the trend line doesn't mean we've broken the trend, because we haven't broken the last point on the trend. We can see that price reacted to the back of that trend line as resistance 1, 2, 3 times, and then we had that bearish engulfing. So reacting to the back of this trend line is reacting to a level of resistance. So we can say here that we've got 4 break and retest 1 hour of the trend line. So that's another confluence. Then when we've seen a bearish engulfing, obviously you need to be monitoring the chart. But if you'll be monitoring the chart once you've had this alert. So this alert is saying, hey, look at me, something's going to happen. Then we got the bearish engulfing. Remember, lower time frame, it means it's a bit weaker, but this is just icing on the cake. You've already got a lot of reasons on the higher time frames for why you're looking at this. So now you're just looking for something to say, yep, now go for it. You're just looking for that last little confluence, just to confirm that you can take this trade. But then see here, what we showed you on the 4 hours, how you had to take that stop loss, or you had to take the trade, but this had to potentially maybe be above here because you're on the 4 hour. Well, now that you're on the lower time frame, you're looking at this and you think, okay, well, I've just seen a bearish engulfing, so I can put my stop loss just above here to have a tighter stop loss, again up to risk appetite, or you can still keep it up there, but you can keep it here, maybe a little bit above the last high. Very, very important. Again, now it's tying everything together. Where's the last high, guys? The last high on this little 1 hour is here. So low, low, lower high, lower, low, lower high on this mini market structure. So even if you just want to keep it above this last lower high here, because you know if price goes above there, then you don't want to be in the market. And then what happens? You take a trade here. Remember, this has just been taken out of anywhere on the chart. You've taken a trade here, and then bang, momentum, because it's giving you the alert. It's told you that market's going to change direction, Then you're just watching for any reason to get into the market and build up your confluences. So here is another confluence. Now, something I've never showed you before, but it's coming very, very soon, is Fibonacci. I think a lot of you want to see the Fibonacci and how to use this properly. Fibonacci is a great tool for helping to assist you get in and out of the market, to enter the market and exit the market. I'm just going to show you it here quickly because this would be, because we're talking about confluences, this would be a confluence. Now, those of you who know how to use Fibonacci, you'll know why this was such a great entry, because that 61.8% rejection there, that would have been another alert for you to say, okay, I'm going to look for a sell trade. And then once you had that bearish engulfing, that was the confluence. But here, that means you've now you've had a fib retracement. You've had a fib retracement. So now you've got 6 reasons for looking at taking a short trade. But what we need to take out of this context, guys, is we need to think what is this mainly about? It's about this. It's about the confluences. It's about building reasons to take a trade. I'm going to take away this Fibonacci. We will be referring back to that in the future. But you can see here from now that once we saw that big wick on the higher time frame, we could zoom in onto the 1 hour time frame, or 4 hour and 1 hour, build up our confluences, and then look for entries. Here we've had that break of the trend line. We've now resistance, 1, 2, 3, the magic number. Then we come up here, hit that Fibonacci, hit that level of resistance we can see through here, and then we've dropped down and we've seen a trade. And this trade, as we know, because this is actually the top of GBP USD, would have gone into crazy profits. Now, let's not forget about the 15 minute and 30 minute. Let's see, is there anything on the 15 minute and 30 minute time frame? Is there anything on the 15 minute or 30 minute time frame that we haven't seen that would also help assist us in taking a trade? So let's just bring this back over. Let's get rid of that. So again, going down to the lower time frames is helping you refine to get a better and better entries all of the time. So here we can see now this is the 30 minute time frame. We've got to come up here, this 30 minute, see how the price action gives us the confluences, because here we just saw a push up, but now that we're on the lower time frames, we can see what this push up was. We can see this push up here is a really nice shooting star. This has come up, rejected and taken out the prior highs here, rejected this, and then that bearish engulfing again. That was the key. That was the alert to get into the market. If we didn't enter up higher, you could look for entering here. And then 15 minute, there would be more. There may be potentially more again. My computer is lagging at the moment, so I'm quite worried about dropping down. 15 minute. It's going into quite a lengthy recording, so it's slowing down. But I just want to be thorough as always. So let me just have a look at the 15 minute, because we want to learn as much as possible. So here on the 15 minute, you can see quite simple trend line, break, retest, 1, 2, 3. Was there anything more? Was there anything more to add to our confluences? Here we can even see back, if we go back to here, that second push up here, evening star formation, 1, 2, 3. Then even if we waited till further over here, if you're being more conservative, as I said, yeah, around here would have just been, you can see here, 1, 2, 3, sort of an evening star formation, and then we could have looked at entering around that same area. So there's lots of confluences for entering around here, which is why then we saw that big sell-off. As you can see, that price action actually then pushed down quite hard. We saw a push down to the downside. So that shows you how to start using all of the confluences all together. How we use all of the confluences together. So how we use all different price action, how we use what we learned in lesson 1, 2, and 3, and how we use the different time frames. We can do more if you want. If you guys want me to do a bit more of this, I think potentially we could. This video, again, like many of our others, has gone on a lot longer than I anticipated, but we really like to go into detail. Leave a comment if you want us to do more on the next one, or you want to do more of these. We can push on with the course lessons, but if you would like some more of these on the side, leave us a comment and let us know what you think. But yeah, this has now shown you, hopefully highlighted to you, how you take course lesson number 1, 2 and 3 and 4, and now hopefully you can have confidence to start taking some trades in the market by yourselves. There's one now what we're going to push on to, which I was going to start doing in price action, but this has basically needs to all be done on its own to teach you it properly, is patterns and trading patterns. So other things here, there's actually other confluences I'm seeing, but there's no point in me talking about them yet because you won't understand them, as we need to teach them in the next lesson. So I'll just shout a few out because you guys may have heard about them before, but triangle formations, double bottoms and double tops, trading ranges, pennants, head and shoulders formation, my favorite. Using the Fibonacci tool that I just showed you, and then we're also in future lessons going to be showing you risk management, manipulation, which is my favorite as well. That's how you get such great entries in the market. The magic number 3, trend line strategy coming, lots and lots and lots coming. But I think we're now at a stage where we've built a good foundation with these first 4 lessons, lesson 4 being in 2 parts, where hopefully you guys are now understanding, even if you're from a very beginner stage, that you've now learned how to draw support and resistance, how to use trend lines, what market structure is very important, and now price action, and not just understanding what 5 candlesticks are, but how to use them on different time frames, and how you can use different time frames to then add confluences to help you take a trade and start making profit in the market. Now, another thing I'm just going to leave you to go to do is that I would have done a little bit more, but we are, I think, about an hour and a half into this video. Is today's homework, or this lesson's homework, is to go and look at the tops and bottoms, like I've highlighted here. Again, find the evening star formations, find the morning star formations, pin bars and tweezer tops and tweezer bottoms. Highlight them on the daily time frame or the 4 hour, then drop down to the 1 hour time frame, and using the same 5 key candlesticks, you see if you can find an entry or a better entry on the lower time frame. So just like what we've done, go down to the 1 hour time frame and see if using those same candlesticks, it might be another morning star, might be a tweezer bottom, it might be a tweezer top. If you can, using just those candlesticks alone, if you can then find a new entry in the, if you can find an entry in the market. As I said, it can be on price action between now and the next video. You don't have to take the trade, just put the risk reward tool on, so you can potentially see a trade. So for instance, if you saw a trade here, you can just put it on where you think your stop loss would be, and where you would think about taking profit, and practice it, and then let us know what the feedback is and how well you're doing with those trades, because I can guarantee that you're going to be making money if you're using what we've been teaching you. Then in the next lesson we may run over this a little bit more. I said we've gone into quite a bit of time, so we've run out a bit of time, but confluences is we want to be seeing the best major confluences that we can see is seeing price rejecting a monthly key level of support or resistance. For instance, price rejecting resistance here. This is on a daily time frame. So what would we want to do? Now you can see here, we can see this big wick, these 2 big wicks, wick, tweezer top formation almost. You can see this wick and this wick. Now we want to drop down to the lower time frame on the 4 hour and see what confluences we can start building. We want to see confluences on the monthly support or resistance. We want to see if there's a trend line support or resistance, and then we want to see market structure, and then we want to start looking at candlesticks. So for instance here, we can see, what was we looking at? Yeah, the 2 wicks there. So again, on the daily time frame, 2 big wicks like that, it's like an alert saying, hey, look at me, something's going to happen, and then the price action moved in the opposite direction. Then here, I think if we put a trend line through here, 0.1, 0.2, guys, what is there? 0.3 of the trend line. And here alone, is where you need to be looking for a trade. Here, Confluences, 1, monthly resistance. So what you can see here is price is broken below here. Price is hitting monthly resistance, monthly resistance. So you've got a monthly resistance there. 2, you've seen that big wick stroke shooting star. So you can see a shooting star here. What else have we seen here now? Which is one of the main confluences we want to be looking out for. Trend line. The third touch of that trend line. These are the strongest confluences you can get, and the 3 ones that you want to be having to know that you're onto a winning trade. Point 1, point 2, point 3 of the trend line. We've come back up, and here what's even better is we've got the third point of the trend line. Third point on the trend line. But on top of that, it's combined, which is extra special. That's when you really see fireworks happen in the market. And what I've said to you in the previous lessons, when you can combine a few of the confluences. So you're combining the monthly resistance with a trend line resistance. You've got 2 forms of resistance. So you're combining the monthly and the trend line. I'm typing too fast. And the trend line. So now, is there any wonder why we've seen such a reaction here, guys? Because you've got 2 forms of resistance. Trend line resistance, monthly resistance. Then you want to start looking on from here. You can drop down to lower time frames, and like what we showed you, use the 5 major key candles that we've taught you now, and then start looking for confluences. Start looking for evening star, tweezer tops. Drop down to the 1 hour. Look for evening stars, tweezer tops, because this is a bearish market, and start looking at where you can enter the market. So there you can see there's more than 4 just on the 4 hour and daily time frame why you would want to sell here. Then you can see this trend line, this gets broken, you need to adjust the trend line. Then you can see here, came up, tested it again for a 4th time, and we saw a push down. Then price, what's happened here, guys? We've got a lower low, we've got a lower high, we've got a lower low. What's happened here? We've made an equal lower high. Market structure. So this is a great entry here. Why? I'll just shout out some confluences now instead of typing them out. So here we have point 1, point 2, point 3. So that was the first sell. Then price broke to the upside. We had a little sell here. Price broke to the upside. But most people, when they start buying here, we're not buying here. Why is that, guys? Because we know from our course lesson 1 that we got this monthly level of resistance. See over here, 1.4000, monthly level of resistance from course lesson 1. Course lesson 2, what did course lesson 2 tell us? It told us that we can break a trend line, but it doesn't mean we've broken a trend. And why is that? Because here is market structure, course lesson 3. Course lesson 3, lower low, lower high, lower low. Where's the best place to take a trade in the market, guys? At an equal lower high or an equal higher low. Why is that? Because it's minimum risk and maximum profit. Because you can set your stop loss. And here, so now you've got loads of confluences here. You've got point 1, and this is point 2 on the trend line here. But you've got a confluence here that is the equal lower high. You've got monthly resistance, equal lower high, evening star formation here on the 4 hour time frame. Those 3 confluences are enough for you to say, okay, I'm selling, and put your stop loss above. And even what you want to do, if you want to put it above this wick here, because this is the last lower high, put it above that wick, and then bang, you're making profit in the market. As a great example. So now what is price doing again? Once again, price is broken through the trend line, but what is it not doing? It's not breaking a trend. Why? Because if this was a lower high, and that's why we took this trade, because this was the new lower high, 3 confluences, trend line, monthly resistance, evening star formation with these 3 candles, and a lower high, 4th confluence. Well, now price has just done the exact same thing again. So you can see here, this was the fake breakout of the trend line, and it made a lower high. Then we adjusted the trend line to this new point, and then you can see it's done the exact same thing again, more or less. it's had a fake out of the trend line and it's come up and made a lower high. And then here is where we can look at taking a trade. So here on the 4 hour, we can see Confluences here. What are the Confluences? The Confluences that we need to take a trade. Well, we know there's monthly resistance. That's one confluence. Monthly support, monthly resistance, number one. Then trend line. We know we've broken a trend, but we haven't broken the market structure. Here, as you can see on number 3. Then we've got, well, on the 4 hour, we've got not tweezer bottoms, but we've got tweezer tops. 1, 2. So that shows us that there's a tweezer tops. There's even as mini evening star formation here. Then if we drop down to the lower time frames, we'll see more Confluences using what? Using the price action that we've shown you today. And then here is once again where you can take another trade. And with the example I just showed you, with the, sorry, I don't know what's over there. With the example that I just showed you, if you're taking a short trade here, where does your stop loss need to be? Well, if this is the last lower high, and when we took the short trade here, we put our stop loss above this lower high. Well, when we're taking this trade from a lower high, our stop loss needs to be above the previous lower high, which is over here. So we can keep a nice tight stop loss here, maybe a little bit of space for any wick fishing, which is something we're going to speak about in the future. And then again, you can see, bang, we're in profit. A great trade there as well. So just clear that. And then now what we can see is what we've done here when the trend line was coming through with this point, and then we made a new lower high. We adjusted the trend line to this lower high. So now we have to adjust the trend line to this lower high. See how we're using course lesson 1, 2, and 3, and 4, and how powerful everything is. So now what we're doing is point 1, point 2, point 3. You can see point 3 is about to, we're approaching to make a point 3. So here, guys, now you can see that what we can actually see here on the 4 hour. Now remember this price action at the start of this video, if we go back about 20 minutes ago, half an hour ago at the beginning of this video, this candlestick here was very, very bullish. It was a full candlestick. But like what we've spoken about today, and a great example now already being presented to us in real time, is what we need to identify the areas of wicks. The wicks are telling us something. So here you've got the wicks that are saying, giving us an alert and saying, look, momentum in the market, things may change, we might see a turnaround. Then what happened? 1, 2, this 4 hour shooting star was a great indication of a potential change in the market. We drop down to the 1 hour time frame, then you get your second confluence. So on the 4 hour time frame, you had a shooting star. Drop down to the 1 hour time frame, you see you got your bearish engulfing. And then if you drop down to the 30 minute and so on, you probably see more. Another bearish engulfing, a bit of a head and shoulders formation, which is something that's coming in the next videos. Very, very, very powerful. Then it just starts, we start giving you more and more and more Confluences to take a trade. But for right now, what we're talking about is here, wicks. So we know that there's wicks at this area, and just like what we explained earlier, so then when we come back up into this region, we know that if we see some more wicks, that we might see some more rejection. Let's just say like over here, we've had wicks here and the market's turned. We've come back up and potentially wicked above here, and then we move back down. But here we now know that, like what I said at the start of the video, when this was a bullish candle, if this turned into a wick, then we know that, or a big wick, remember, the bigger the wick, the more of an alert it is for us. If we see a big wick here, then it's going to give us an indication that price may turn around again and go back down to the downside. Now, while we've been doing this video, this candle has now actually reduced, and we have seen, now we can see a wick. So now what we want to do is see what the next candles are. But now to take a trade in real time, we want to be looking at what, guys? We want to be looking at Confluences. We want to be seeing what Confluences we can get in order to take a trade. So let's have a look. Main Confluences. Well, we know that there's this area here where we've already made some wicks. But we also know what else now, because of our course lesson 1 and 2. We know that we've got a trend line coming across here. But remember, many people will sell at the trend line because everybody tries to trade off trend lines, but they don't understand market structure, which was the powerful lesson number 3. So what we have to understand is that price could break this trend line and could push up and potentially hit our weekly resistance level, which is just above. May not, but this is what we use lower time frames and price action to show us. But what we may see here is price just push up again tap into this trend line to make that all important magic number 3, that third touch, 0.1, 0.2, 0.3, and where we've already got some wicks here and we've shown some rejection, so now we've got another confluence. So if price comes up to here, we'll be making the third touch on the trend line, and we'll also got the confluences from price action, and we'll also see what at the moment looks like it could be a double top. So again, these are patterns which are part of price action but need their own video. So we're going to be talking about how to trade double tops, how to trade double bottoms in the future videos. So here we're coming up to an area here where we could see price reject this and then roll over to the downside. You can see here we're making lower lows, lower high. We haven't made a new lower low, so we might make an equal lower high here, and then we could push down to the downside. So that is an understanding of how to start building up confluences. Now with this, you'd want to drop down or wait for the daily candle to close and see how the daily candle closes, or drop down to the 1 hour time frame, potentially today or tomorrow, to see how price action, if we can get those confluences and build up the confluences, and see if once we hit that third touch of the trend line, then there may be a trade presented to us. So that is exactly how to start trading, guys. And this is the foundation that's been given to you now, so you can understand the core elements of trading. And this is enough to make you profitable. So many people don't know what we've shown you in course 1 to lesson 1 to 4. And there is a lot more that you need to know psychologically. There's lots more patterns that we've spoken about, triangles, head and shoulders, pennants. There's a lot more to it, but these are the main core parts of trading that you need to know. And the more simple you keep it, the better your trading will be, because so many people overcomplicate trading when it's not needed, when you can quite simply see from what we've shown you here how powerful just using the first four course lessons are, and really understanding price action, stripping it all back and just understanding price action and how to read it. And you can see, once again, we haven't gone through all of the candlesticks, but you can see all you really need to know is those 5 that we showed you in part 1 to be able to take trades. Let us know your feedback, guys. Like the video and leave us a comment. Said if there's any questions that you've got, leave them in the comment section. We'll be looking and answering. If there's anything in particular that you'd like us to go over in some of the future videos, let us know. Hope you enjoyed that, and hopefully that gets you excited to actually just start going back in time to back test this, and also just looking over between now and the next video, just practicing everything that we're showing you. Just get the risk reward tool out that we've shown you, get the risk reward tool, take example trades, for instance, see how that works out here, see how this works, and just see how it works on lots of different pairs and see how the trades play out. Use all of these, practice between now and the next lesson, practice building up confluences. Try and get as many confluences for a trade that you can, and then see how well you do with your trading. So now you can actually start taking trades or start taking demo trades if you're brand new to trading, and start using this way of trading. You'll see how effective it is. You can see how just here with a GBP USD chart that we've used throughout this course, that just in front of us here, how we've seen 1, 2, 3 sell positions, and even you could have got it at the top here by which will show you a little bit more, by getting right down to the lower time frames and just keeping an eye on things. But here, to the lesson coming out of today, one of the major lessons coming out today was identifying wicks and keeping an eye out for these wicks, because they are an alert and can give you a sign of things to come and things that are going to change. Hope you like that, guys, and we'll see you soon for the next course lesson. Thank you.